Greetings to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for Thursday, 10th of August in this video. So first of all, let's review the major market movement. The first instrument we are referring to the US dollar index, which measures the greenback's rank against a trade weight basket of 6 major currencies. So it was eased from session's highs against a basket of global currencies on Wednesday, rose by 0.07% to 93.55 as geopolitical tensions between the US and North Korea intensified. And this was lifting the investors' demand for safe havens like gold and the Japanese yen. So the dollar eased from 2 weeks highs as the market participants flat risky assets on the back of US President Donald Trump's warning to North Korea on Tuesday that the isolated nation face fire and fury if it makes more than threats to the United States. So Trump's comment came hours after revelations the Kim Jong-un-led nation had successfully created a miniaturized nuclear weapons designed to fit inside its missiles. So geopolitical tensions depends after Pyongyang replied it was carefully examining a plan to strike Guam, where a US military base is located, prompting investors to seek safe haven assets like the Japanese yen. So producer price index and consumer price index data, both used as measure of inflation due Thursday and Friday respectively, is expected to shift investors' focus to monetary policies as the slowdown in inflation has been a key concern for the Federal Reserve. So the US Central Bank left its benchmark rate unchanged in July amid concerns about the slowdown in inflation, but expressed optimism that its long-term target of about 2% inflation would be met. While it is still linked, the pair GBP/USD rose slightly by 0.04% to 1.2995 on Wednesday, as falling investors' expectations of the Bank of England introducing monetary policy tightening continue to weigh on the sterling in the wake of the Bank of England Governor Mark Carney's somewhat dovish comments, following the central bank decision to leave rates unchanged. At the same time, the pair USD/CAD was rose 0.28% on Wednesday to traded at around 1.2702 against the US dollars. So this is after the data show Canada housing starts increased to 222,300 last month from 212,900 in June. So analysts has expected the housing start to hit 205,000 in July. Having attacked in commodities markets, the gold price was spiked to 1-week highs on Wednesday, rose $17.14 or 1.35% to $1,279.67 a troy ounce on the back of a surge in safe haven demand after North Korea say it is considering an attack on the US Pacific territory of Guam. So safe haven demand grows after North Korea say it was carefully examining a plan to strike Guam, where a US military base is located, shrugging off the President Donald Trump's early warning that further threats to the United States will be met with fire and fury. So the surge in gold prices come a day after the yellow metal snapped a 3-day winning streak as investors cheers US jobs openings data that topped expectations, suggesting the US labor markets continue to strengthen, and this was raising the prospect of the Federal Reserve hiking rates later this year. So gold price is sensitive to move in US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, with the West Texas Intermediate crude price was settled higher on Wednesday, rose by 39 cents to settle at $49.56 a barrel as investors cheered data showing a sharp decline in supplies of US crude, but gains were capped by a surprise uptick in gasoline stockpiles. So the crude price snapped a 2-day losing streak after a report from the Energy Information Administration's EIA showed crude stockpiles fell by more than expected last week, and this pointing to an uptick in refinery activity. So inventories of US crude fell by roughly 6.5 million barrels in the week ended August 4th, and this was confounding expectations of a draw of about only 2.7 million barrels, and it was 6 straight weeks of falling crude inventories. So the mostly upbeat crude inventory report from the EIA was offset the earlier negative sentiment as investors mull over a statement from OPEC concerning the outcome of its meeting on compliance. So now we're going to review the highlighted economic data and events on yesterday, as well as the focus data and event today. Right, so yesterday China was released the consumer price index for July, and it was at 1.4%, which is slightly disappointed compared to the expectations of 1.5%. Alright, so having a tap in the Canada was released the housing starts on yesterday for July, and it was at 222,300, so it is slightly better than expectations, and it was taken as the momentums for the Canadian dollar on yesterday. So the last data on yesterday is the crude oil inventories, and it was declined more than expectations with negative 6.451 million. Right, so as for today, during the morning sessions, the Reserve Bank of New Zealand was decide its interest rate benchmark for this month, and it was as expectations at 1.75%. Okay, so during the European trading hours latest, the United Kingdom is going to release the manufacturing productions for June, and as well as the United States is going to release the producer price index, which refers as the main reference data for the inflations, and it is expected to remain the same at 0.1%. So now let's take a look for technical analysis, and first instruments we're referring to the GBP/USD in 4-hourly charts. So the pair GBP/USD remain traded in an uptrend, but currently is still retracing following a dive cross that formed by both moving edge line earlier. Right, so a price closure below 1.29500 is a signal for it to retrace more, and probably will fall further towards the next target of support level at 1.29300. While the Euro/USD in 4-hourly charts was fell below the both moving edge lines, and both of the line was form a dive cross as well. So these are the signals for a short-term bearish. Okay, but the pair was remain traded in an uptrend. It seems like losing momentum, so it is expected to be ranging between 1.17200 and 1.18900 for short terms. So a price closure below 1.16800 is a signal to experience a retracement period, and the next support level we can refer to 1.16100. Otherwise, rebound from current levels suggested to move higher in short term within the range of 1.17200 and 1.18900. As for the Kiwi, it is currently remain traded in a downtrend, okay, following a dive cross that formed by both moving edge line earlier. The price now was closed below the support level of 0.72800, suggested to fall further towards the next target of support level at 0.2100, right, 0.7100. As for the Aussie, the pair AUD/USD in 4-hourly chart was remain traded in an uptrend as well, but the both moving edge line was formed a dive cross, as well as the price was fell below the both moving edge line, so it is considered retracing, and the price closure below 0.78500 is a signal for it to retrace more and fall towards the next target of support level at 0.78200. As for the Japanese yen, it is remain traded in a downtrend, and the both moving edge lines are still expanding downwards. So a price closure below 109.500 it suggests to continue its downtrend, and probably the price will fall further towards the next target of support level at 109.000. As for the commodities markets, the gold price remained in an uptrend, so following a price closures above 1279, then it is suggested to move further higher towards the next target of resistance level at $1,295. So referring to the MACD, the bull movement line is expanding upward now, and in addition with the momentum is still very strong, considered strong, and stood at the level above zero. So these are the signals to supporting the gold price to move further higher after the price closure above 1,279, then the next target will be 1,295. And the oil price, with the West Texas Intermediate crude price, is remain traded in an uptrend, but seems like losing momentum, and it was remain traded between the range of 48.9 and 49.7. So a price closures out of the range is a signal to move further towards the directions, and the next resistance level we can refer to 50.40, and support level we can refer to 48.50. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.